The Hedgeless Horseman here. It's June 1st, 2022. This video will be about why, as a commodity bull, we have time on our side. And I think that's a very important thing to always remember, especially during the quote hard times like now, where, metals are actually doing quite well for the reasons we will discuss. But the future supply, aka the junior sector, uh, junior mining sector, are doing very poorly. I mean, in terms of valuations, and that doesn't really rhyme, of course, because the reason why prices are high in metals is the same reason why future supply is needed more than ever and will be needed more than ever. Ergo, they should be valued appropriately. Uh, but they are not. Anyway, I mean, one big reason is, of course, the money printing and the record low rates. That's basically pulling demand forward in time, which means, I mean, if I didn't have money to finance building a new house or buying a new car, whatever uh, thing I would want to buy, which requires a lot of commodities. If I can buy that, there's no that consumption will not be a reality. But if I can put it on a credit card or borrow hundreds of thousands of dollars to get my house or build my house or get my boat or get my car, whatever, that means I'm pulling demand forward because in theory at least, will have to save up money later and draw down on consumption. So consume more today, but have to consume less tomorrow. So as we do that, and the borrowing rate or the debt just keeps increasing, that means we're pulling more and more and more demand forward in time, which in theory means that we will have to consume less sometime in the future. Of course, I mean, this can has been kicked by governments and central banks because they just, when demand tapers off, let's say, they just print more money and throw out more money and increase the borrowing. So consumption can stay steady, let's say. Uh, so I mean, at that rate, that means we're just consuming more metals quicker, pretty much. And then we have the ESG trend, which has been quite powerful, and I would say has been increasing for quite some time. I mean, nowadays, even to go out and explore pretty much anywhere, even if it's out in the outbacks of some country, you need a lot of permits, and if you are gonna put up a mine, it takes a lot longer today. I mean, I remember hearing stories about how quickly, just in the 80s, let's say, I mean, you could go from a discovery to a mine in like 5 years. Today, that's probably closer to 10, 20 years. I mean, I recently talked to a management team who discussed the fact that a major discovery in Africa, it took 8 years from initial discovery to production, and that was very impressive. So that's 8 years to bring that a major mine online from discovery to production. 8 years. It's not like, I mean, when you look at oil, for example, you constantly see headlines uh, akin to, White House phones up Saudi Arabia and wants them to, uh, open the spigots, or however you call it, turn on more supply, basically. You can't do that in the metals and mining industry. Obviously, there's a huge amount of capex. You have to dig stuff up, build stuff, truck it, yada yada yada. But if you have an oil field or whatever, I mean, you could, I guess, simply just turn on a few more spigots. The green wave, everything is getting electrified. Obviously, a lot more copper, nickel, lithium, etc. needed, and that's both for battery metals and like engines themselves, the engines themselves. And there's a bunch of other metals, of course. I mean, you would need more zinc, you would need more, rare earth metals. So, I mean, in my opinion, metals are in a chronic long-term bull market thanks to the median voter, because this is, uh, this is the result of policies, obviously. So the path is set in stone until further notice. One thing, of course, is that one thing to keep in mind is, of course, that I mean the rising prices we see, and that's for energy uh, as well. I mean that kind of constrains the consumer because their everyday costs are going up and everything they want to buy is getting more expensive. So I mean, like in 2008, 9, we saw demand destruction because I mean oil went to $150, which cut into the budget of people, which meant that okay they had less money over to consume other things. So that there's I mean it's a double-edged sword, especially with the metals that are being consumed, because okay you have these shortages, you have the lack of supply, you have a steady demand thanks to money printing and whatnot. That of course means that there's going to be price pressures to the upside, but at some point in time, people cannot afford to buy the stuff or even borrow more to buy the stuff they want to consume. So you can have a, demand could go over a cliff if we go into a global recession, which we did in 2008-9, and copper prices, etc., went down a lot. But that didn't really change anything, of course, and that dip in metals, which I mean, many metals were subdued for quite a long time, and that doesn't make miners or explorers to go out and look for more metal. Of course, that's going to be a less capital entering the sector to firm up the future supply. So that makes, like Rick Rule says, the authors of bear markets are bull markets, and the authors of bull markets are bear markets. And it's like if we look at just some headlines, for example, I haven't put the date, but they are pretty recent. Most are within the last month or so. This one is today. I mean, you can do a you can sit and watch the paper price and just be, let's say, downtrodden. But one thing to keep in mind is that these trends are, again, pretty much set in stone. That we are simply not finding or putting enough supply into production to meet the demand if we go at the same pace. And big paper markets like silver, for example, where there's huge short positions in the uh, COMEX, in the paper markets, and that goes typically for I mean gold, platinum, and especially silver. If I have a large hoard of something, I can obviously sell it at a discounted price because I wouldn't need to have a balanced supply demand picture until I'm almost out of stock. I could sell, if I have 100,000 cars, I could sell them very cheaply. But if I would want to have a marketplace, I can only sell until the supply and demand picture, supply and demand curves cross, so I have some kind of balance, so I don't run out of cars. So I find it interesting that I saw this tweet: Comex registered silver falls to lowest total level since October 5, 2018, as over 2.9 million ounces are transferred to eligible registered silver stock to eligible registered silver stock, now down over 51% since the silver squeeze weekend, totaling 76.7 million ounces. So there's obviously a drain that has been happening from the registered category, which means ready for delivery in the COMEX. So even though silver price has been, well, it's been actually neutral for the last year or so, I think it's been shopping around. It appears that physical uh, silver ready for delivery is decreasing, and again, it's like that leads me to believe that the current price of silver is too low for the physical market to balance. So there's a run, let's say, not a big run yet at least, but there appears to be some kind of run over the last year on silver. And then you can read headlines like zinc inventories diverge between Shanghai yada yada and LME, with LME zinc stock hitting a 2-year low. This was quite recently, and you can read the rest. I mean, main point is that we're seeing shortages with the demand picture we have right now and the supply picture we have right now. And the future supply picture is getting worse and worse. I mean, I remember reading something along the lines of the copper market would need to bring one new Escondida mine online every year until, 2030 or whatever, to plug the supply demand gap. And Escondida is, once in a lifetime type of discovery, largest copper mine in the world. You don't find those every day, obviously. And if you even find one, you can't bring that online anytime soon. So it's like some of the lag times to bring supply on board is again has been increasing, and demand is actually picking up, especially for copper and whatnot. So it's like I'm bullish pretty much on all metals especially in the very long term. With that said, again, I'm a bit more cautious on the industrial metals because I see the current, well, shitstorm out there in the economy with ramping inflation and demand destruction and housing market keeling over. I mean, I don't strike that as a very bullish picture on base metals, etc., in the short term. But in the long term, it's like if we go back to these levels after a recession or whatever, or if we can keep printing demand, that they'll just pour more money into the economy, etc. I mean, these trends are still intact, and it's just gonna get worse and worse and worse. And obviously, you cannot print supply, and that's the whole point why I love commodities, especially the monetary metals. And on that note, here's Brent Cook, a video from 2019 where he talks about this overall macro trend that is ongoing despite what the daily swings or weekly swings in the metals are doing.
And confidence in the U.S. More important, this is, metal demand is not going away. And I think this is really, we all know this. What you can see here is how metal demand has increased over time. And what's to say, copper production for all history, and then you can see that it's forecast to double over a short period of time. The second important point, production or demand's going up, discoveries are going down. This is all metal discovery. And you can see even with estimated production or discoveries, which is in the light gray, they're going down, and there's a lot of reasons for that. And this last little slide here shows the percentage of discoveries that have been put in production by decade, more or less. And you can see that the earlier, 72% of the earlier discoveries from the years 1950 to 60, 72% went into production. Since 2000 to 2016, we see about 18% of those discoveries put in production. So there will be more coming into production, but just realize it's taking much, much more time to find these things, delineate these things, and put them into production. And the problem is the odds are just basically low. And on
Yeah, so I mean, I think you got the gist of that. And of course, that's his macro thesis. And of course, when we see it, when we're looking at the prices of, well, even oil, even though that's not a metal, but that's also been undercapitalized for a long time because nobody has dared to spend much on oil or gas exploration because, I mean, every politician basically are saying that oil and fossil fuels are bad, and who would want to put a lot of money into a sector where you hear the politicians basically promise that we will make your sector obsolete. So now we're reaping what the politicians have sowed, and that goes for all metals. And copper, near, I don't know if it's at all-time highs or whatever, but it's not, too far off. And zinc has been doing well. Tin has been, putting out all-time highs last year or so. Uh, Nickel recently, you probably saw the, spike with there were some problems with short covering, but that's because it was a tight supply picture. The shorter couldn't really meet demand, so they had to round up a group of banks, etc., to bail it out, and the nickel market didn't really function for a few days as price went up 300% in a week or whatever. I mean, those are all signs of something that's unbalanced in the supply demand picture. And you're seeing some trading houses exiting metals exchanges, and you see I think it was Trafigura or some metal trading house basically exiting the zinc space or zinc market or zinc trading on some exchange. So there's a lot of stuff going on behind the scenes, which I mean the everyday citizen is totally unaware of. So the trends he's describing, I mean, again, they're pretty much set in stone. You can't magically discover more ounces of metals. You can't magically put them into production when everybody who's making the decisions is basically believes that commodities come from the sky above and you don't actually need to have a mine anywhere, at least close to where they live. I mean, everyone just assumes that okay, no mines in our country, but that's all right because some other country can mine it. So the not in my backyard stuff is like leading to obviously not helping the supply demand picture. So I guess the gist is, and I mean, look at gold. I mean, this looks like a major pressure cooker in my book. I mean, as I see it, we're simply consolidating right now all the, crap that's going on. Like in 2008, this was like a lid, and then we have the, obviously the panic selling of 2008, 2009, and it shopped around for 2 years pretty much, and then it broke higher and went on a run from 1000 to 1950 or so. So it doubled within like 3 years. This looks like a pressure cooker to me as well. I think this is for sure gonna break out one day, and then we will be off to the races again, because I don't see things getting better, and I see things getting increasingly favorable for gold and silver as the ramping base metals and energy prices are basically taking down the consumer and the system. So something needs to happen, and I would assume that whatever comes after this consolidation, where I mean, it's like in COVID or whatever, the shutdowns which hurt a lot of businesses. I mean, everybody, and they went out with throwing money around, especially in the U.S., and you get crisis loans and and whatnot. So, I mean, even though a crisis, let's say, is happening, I mean, it takes some time for it to break something, because there's going to be a lot of policies. I mean, there's going to be a lot of decisions to try and counteract what is happening, obviously. And even if you are a consumer, or, I mean, ordinary citizen, if you're getting tight on funds with the oil price rising, etc., maybe you'll start by borrowing some more. And I think I saw some number on how much credit has been taken out, and that the borrowing rate in the US, I think, is close to 2008, 2009. So the consumer is hurting, but you might start off with taking out a new credit card, and then you might, be able to borrow some money from friends or family that are not, up to their eyeballs in debt already. But if the longer it this, inflation, etc., keeps on going, you know, at some point in time, the runway will end, and you can't kick the can on a personal level any longer, and you'll have to maybe default on some loans, etc. So it's like everything takes time, and there's gonna be policies, and everybody's gonna do everything they can to keep the boat afloat, so to speak. But the main point I'm trying to get across is that the path is pretty much set. And again, this is where the patience comes in. I know it's not fun to just sit around and watch I mean, junior miners, for example, they've been very cheap for about a year, increasingly so last couple of months. I mean, some are, literally dirt cheap, where they basically are giving away future supply, aka the projects they have. Even though obviously future supply is going up in importance because of the demand supply picture, and in the case of precious metals, because the world economy is cratering, and the consumer is cratering. So it's like, yes, this is gonna take a lot of time, but I see it as, akin to The Big Short, but in the opposite direction. I mean, if you watch the movie The Big Short with Michael Burry, who bet against the housing market, I mean, it took 2 years before housing actually started to keel over. And in that movie, they describe how much shady stuff was going on to try to paper over the problem. Rating agencies, etc. Nobody was willing to set the price of his credit default swaps at a fair value because it was not in their interest. And so, I mean, the whole system, especially, the US government, Fed, and anything that keeps the king dollar in place as the king dollar, I mean, they're probably doing everything they can to not see gold and precious metals go on an absolute tear, because that's going to be such a signal value that the system is taking on water, and the dollar is not the dollar as it used to be over the last 50 or 60 years. So we simply have to let everything like this play out, and we should expect a lot of kicking and screaming and decisions being made that goes against us, because it's gold, etc., is pretty much the only thing, I would say, or the top thing that nobody in power wants to see go on a bull tear, because that's such a bad signal for everything. And especially if they want to keep their jobs, they obviously have to, that's what politicians do, try to convince everyone that everything is fine and that they're doing a good job, but that would not signal that they're doing a good job. So they'll do anything they can, of course, but the fact remains that the more votes they buy with their ESG thing, their Green New Deal thing, and etc., that just dampens supply even more. So they're basically shooting themselves in the foot, because they're just kicking the can forward and creating even more pressure to the upside when it comes to the supply shortage in metals and oil. And we're seeing, they can ignore reality for a long time, but they cannot ignore the effects of reality forever. And now many of the base metals and metals overall and energy prices are reflecting that they have ignored reality for too long, and it's starting to show. So it's a long game, but like The Big Short, I'm in this to have a big payday one day. This is the big long for me. I'm all in on hard assets, real assets, primarily gold, and then silver, and then some other stuff like nickel, zinc, lithium, and whatnot. So I'm betting. I mean, because the picture is kind of the same in all metals. It's just that I think the risk reward is even better uh, for gold and silver, perhaps when you factor in the demand shock, because I don't think there's going to be a demand shock in base metals given the state of the world economy. But given the state of the world economy, I can see a demand shock in precious metals. That's basically it. So, and I see them as hedges against themselves in a way. I mean, if we just keep printing money, have record low rates, pulling demand forward, that means that base metals would just go in increasing shortages. Whereas if they're at the end of the line and they can't kick the can anymore, I think that's when gold and silver will start to shine again. And yeah, that's basically it. So I have a bit of everything, but to me it's obvious that real assets and commodities are the place to be, regardless of what actually happens. If the world crashes, gold and silver will be the place to be, as usual, as it has been over 5,000 years. If we kick the can, I expect metals, including gold, to do well. I expect base metals to do increasingly well because that means same demand pace or even increased demand pace, and supply is not coming online anytime soon. Thanks for listening. Hope you have a good day, and hit the like button if you like what you hear. Bye.